Welcome back to Global Business Report. World Bank and the International Monetary Fund on Wednesday faulted Nigeria's economic recovery claim, and listed Nigeria among some African countries with weak economic recovery. Now, the World Bank's stand was contained in the 28th edition of Africa's Pulse, the World Bank's twice-a-yearly economic update for the region. On its own part, the IMF said that the economic outlook for Nigeria under the current policies of government remained challenging. Joining me this morning to discuss this development is Vwede Edah, investment analyst at Afrinvest. Vwede, it's good to have you as always. Good morning.
Good morning.
All right, let's take a look at this. According to the IMF, as you've heard, elevated fiscal deficits rely on central bank financing, which complicates monetary policy. So what are your thoughts on this, given the 2020 revenue projection? I'm sure a whole lot of people would like to know what elevated fiscal deficits is actually,
Okay, so let's start with the budget projections.
All right, good.
We're expecting there's a proposed revenue of over 8 trillion naira, and then we're wondering where is it going to come from, looking at the previous performances. Now, these new proposed projections are based on, they're based on the assumptions that oil is $57 per barrel.
Yeah.
We have a production of 2.1 barrels per day, and we also have exchange rates at 305 naira to a dollar. And looking at what we've done this year and what we did 2 years ago, we have we've always underperformed our projections, at least over 50%. This year alone, in the first 6 months, we made about 2 trillion against the 3.5 trillion proposed, or budgeted rather.
All right.
And if we say that the full year is going to be 4 trillion, it's still 50% lower than what we actually projected to make for the year. In terms of the elevated fiscal deficit, I feel the government has more confidence based on the support that they've received from CBN in terms of borrowing. I think CBN has supported the government with about 1.9 trillion naira this year alone. So that is obviously buoying their confidence to expect such continued support by the CBN, and is also based on the fact that we continue to see the CBN help borrow on behalf, increase debt profile on behalf of the government. So.
Very good. Now, the IMF also touched on, growth expectations and initiatives and planned reforms, including proposal VAT increase to 7.5% by the federal government. So will this weaken consumer spending further, and how will these reforms impact the economy on the long run? Okay,
so the reforms are actually supposed to boost economic growth. So this 7.5% proposed VAT change in VAT reform is excluding, there's a minimum requirement, so it's excluding companies that earn below 25 million, which is a majority of companies in Nigeria earn below 25 million in revenue annually. So it excludes them, and it also excludes the basic food demand. So we have rice, grains, water. So VAT is not going to affect these, and so it would not necessarily weaken consumer spending. And at the same time, we don't also expect it to significantly, bolster the revenues and net off the declines we're seeing in oil revenue, because with other increasing expenses and the fact that the increased VAT is not going to significantly add to the revenue, because most of the companies are, below the 25 million naira threshold. We don't expect, significant impact there. And now looking at the other reforms that the CBN is introducing is actually pro-growth. So like the fact that they're asking banks to borrow more, they're trying to make banks, give out more money to the real sector. Although IMF cautioned that, it might also affect the banks' asset values and also bad loans. We have to also be careful about that. But basically, the pro-growth strategies are supposed to boost the economy. So we don't expect it to weaken consumer. We don't expect the VAT to weaken consumer spending.
Good. Now let's move on to the CBN's control of the financial system, liquidity via open market operations, or OMO. Should we expect one this week?
Well, we've had one today, actually.
Okay.
So Yeah, we had 443 billion maturing worth of maturing investments today. So we actually expected, based on liquidity levels as of last week Friday, was positive 200 billion thereabouts. So we actually expected more mop-up actions by the CBN, but we saw that the demand filtered into the secondary markets, and we've been seeing secondary market T-bills, slightly bullish all through the week, and because of the scarcity of OMO auctions, of course, and the expectations for the OMO auction, they gave us short, medium, and long term as usual, 91, 182, and 364 days thereabouts. And we also expected that the rates would also slightly be reduced, and the demand would also slightly be reduced, except for the long-term bills, because a lot of investors filter their demands to short and medium-term securities in the secondary market. But the 364-day bill that was issued today by the CBN should, as we've seen in the past few OMO auctions, should be oversubscribed.
All right, and your thoughts on the fixed income markets, as it were, this week?
So same thing, treasury bills, money markets slightly bullish based on heightened liquidities, and people also taking positions ahead of their maturing investments today. But the bonds market remained really quiet because, investors, there's no change in the economic, no economic catalyst to kind of boost, expectations in the bonds market. We're also not looking forward to a bond auction. So there has been no significant factor that has been, really pushing investors in the bonds market. So we've seen a series of quiet trading sessions, and we expect that to continue till the end of the week. Your
advice to players in the equities market who have lost value to the current bearish runs recently?
Yes, so, yesterday the market was also bearish. We've seen a bearish round all through this week, and also we've seen more weakening investor sentiments. It was about 0.8 times yesterday as a close of market. A lot of bellwether stocks keep on losing due to sell pressures. Yesterday, Danksem, Nestle, Nigerian breweries all dragged the index, and although we saw some gains in the banking stocks due to bargain hunting, it still wasn't enough to boost it or to lift it out of the negative territory. I feel that most players in the equities market should be mostly long term, and because in a bearish market there are no little opportunities for speculative gains.
Indeed. Vwede Edah, I'd like to thank you very much for your thoughts on those issues. Good to have you as always.